Following Tesla's 6% rally today, I think it's more clear. It's been clear, but I think it's even more clear today that starting next week, everything is about to change. The narrative is about to change. The bearishness is about to change. Tesla's stock, in other words, is going to explode higher. I don't think it's just Tesla. I think it's the broader markets. Take a look at the S&P today. This trend line I've had drawn on this chart for a while. We had 1, 2, 3, 4, 5, 6, 7, 8 tests, if you will, of this trend line, and others that were close, like here and here and here that I'm not counting. And you got rejected at this level every time. It was a resistance trend line. You had a support trend line down here. What happened today? You gapped above this trend line. There is no clearer, sign of a breakout than something like this. Now, it's day one, of course. Some people are going to doubt this. Some people are going to say, oh yeah, this is not the start of a larger breakout. It's day one. I expect people are going to be kind of, hesitant. Over the next couple of trading days, it will become very obvious the breakout that's coming. Now, keep in mind, Trump's planning 100 executive orders on day one, and we're going to get a lot of new information coming on Monday. I think Monday is going to be a huge day for markets. Now, you've heard this before, okay? Buy the rumor, sell the news. Seems like that's how it normally plays out. Sometimes you sell the rumor and you buy the news, okay? That's what has been happening in regards to Trump's presidency. People have been selling the rumor of higher tariffs and higher inflation and all the bad things that could happen. And coming on Monday, we're likely going to buy the news. When the inauguration happens, when we hear about all of these plans and these day one executive orders, it's probably not going to be nearly as bad as we expect. Specifically, tariffs have been the big line in the sand for markets. High tariffs have been seen as negative, and low tariffs have been seen as positive. Well, there was a rumor, more or less, that has been kind of confirmed by Scott Bessent over the past 48 hours. The rumor was that Trump's team may opt to do tariffs every month to get to a certain point instead of just all at once. And the news came out today that Scott Bessent and a majority of Trump's economic council support the idea of a stepped up tariff basis. Not all at once, but stepped up. So we haven't heard from Trump, but it sounds like that is actually what the Trump team is considering. Okay, that is positive. Today we had a Trump-China call in which it doesn't sound like we're entering into a trade war with China. In fact, it sounds like the opposite. It sounds like Trump is trying to work with China to create beneficial policies for the U.S. and China. It doesn't sound like these two individuals, these two world leaders, are planning on throwing economic blows anytime soon. Could that change? Obviously. But Wall Street's perspective has been, tariffs, that's one thing. Retaliation, that's another. In other words, a full-blown trade war would not be good. We've seen that in 2018, and the S&P fell 20% within the course of about a month. Okay, so it looks like all of the things that Wall Street has been worried about recently are kind of not nearly as bad as we initially projected they would be. There's only one individual on Trump's economic council that wants to slap universal tariffs on everyone at the same time. So it doesn't look like that is going to happen. Now, I don't think Wall Street is fully understanding that just yet. I think you have to hear it from Trump personally that we're not going to see these universal tariffs. Okay, now even Scott Bessent says the best way to get onshoring back to the U.S. is by tariffing certain sectors, not broad-based, but tariffing certain sectors. That could be car makers building cars in Mexico. That could be, you know, I don't want to use iPhones as an example because Apple got an exemption in 2017 to, you know, not be included in the Trump first round of tariffs. But other specific areas that may be, you know, coming from China, right? Maybe food production or something for that matter. Certain industries, that is better than expected. And given the more or less confirmation of this breakout that we are seeing in the S&P today, I think that's just further proof that we're going to buy the news once Trump is inaugurated on Monday. And I think Tesla stock is also reacting to that today, being up more than 6%. Tesla stock is looks like it can't be stopped at this point if you want me to be honest. We broke above that 20-day moving average at 418 today and just continued to rally to that about 440 level. As I said in previous videos, once you break that 20-day moving average, you're set up for a run at least to the 460s, if not higher. Now, also consider what I've been talking about here on this channel for a while now. Sentiment is very negative, okay? You had at one point like 80% of stocks in an active decline. It was really bad out there. You now have about 60% of stocks in an active decline. So things have gotten a little bit better over the past couple of days, but you're still nowhere close to a bullish market. Okay, still only 40% of stocks in an active uptrend, at least above their 50-day moving average. CNN's Fear and Greed Index at 38. AI Investor Sentiment Survey shows bullish investors at 25%. You have not been that low, and I can't even tell you how long. Those are like 20% crash-like levels of sentiment. Sometimes you can get lower at like 20% during a 20% crash, but normally more than a quarter of investors are bullish on markets, and we're not there yet. Now, another sign of a strong upcoming week, I would say, is the amount of shares being covered on today. You have about 1.2 million shares that are being covered today in Tesla stock. And, you know, Trump and President Xi of China working together, I don't see how that could be a negative for Tesla any way you want to put it. And I think some people are getting ahead of that and they're saying, oh yeah, we're just better off covering on this short position. Now, Tesla's short interest of free float sits at 2.4%. You have $27.74 billion sold short in Tesla, totaling 67.04 million shares that are still sold short. So there's a lot of gasoline next to the fire, if you will, to really get this thing up and moving as far as a short squeeze, if that's what happens next week. Now, you have 205 different trades today, totaling $180 million, with a positive order value of almost 70% in Tesla. That also looks like a pretty strong number. Now, for next Friday's expiration for Tesla, the call open interest is 57.61%, put open interest 42.4%. Here today, you have 66% of the volume to the call side and 34% of the volume to the put side. That is almost 2 times as many calls versus puts today. That's pretty strong heading into a big catalyst next week, which is the Trump inauguration. Now, I will also say the start of earnings season so far, the backbone of our markets, if you will, has been pretty good. Bank earnings have been good across the board. TSMC had really good earnings. I have no reason to believe we're going to get bad earnings for this earnings season. In fact, it looks like we're going to surprise to the upside for this earnings season. And that, as the backbone of our markets, is important. If earnings, were to disappoint, that would be a big problem. Now, Tesla has earnings upcoming as well. Not this week. It looks like next week. Yeah, so not this week, but next week. And I mean, we're going to get Netflix, you're going to get 3M, you're going to get Discover and Abbott, Johnson & Johnson, Halliburton, obviously more banks, Texas Instruments, Verizon, Intuitive Surgical, CSX, Huntington, and a couple other, important names. Kinder Morgan is in there, Comerica is in there, right? Zion, Seagate, Interactive Brokers, United. But really heading into Tesla earnings, I think there's a lot for people to be excited about. The robotaxi network. It looks like Elon and Tesla are going to confirm that is still expected to launch in 2025. The cheaper, lower priced Tesla, I believe, is still going to be coming in 2025. These things are going to be a positive for Tesla. I really don't forecast any big surprise, negative news on Tesla earnings. And, if I'm correct on that, well, you could see a nice rally after Tesla earnings, but it wouldn't surprise me to see a rally into Tesla earnings, especially, since I think the markets are going to rally. Like Tesla should rally more than the broader market. So really just being bullish on the markets here means you should probably be bullish on Tesla. Now, of course, the TikTok ban goes into effect on Sunday unless someone buys it. We still have not heard anything from Elon in regards to the TikTok news, at least from what I can see. If he starts to entertain the idea of potentially buying TikTok, that would be the one big negative for Tesla that I could see right now. But I'm just not, it's not something that he's commented on, so it's hard to speculate. Tom Lee said today, market internals shows signs of bottoming with the percent of S&P 500 stocks above the 50-day moving average falling to 16%, the lowest since November of 2023. He says sentiment indicators such as AAII percent net bulls falling to negative 15% suggest nearing capitulation, though not complete. And January barometers are positive so far, with the first 5 days being positive. 82% probability of a full year gain, and January month to date at positive 1.2%. Dawn Farrell, that also works at Fundstrat, says cool CPI, soft retail sales, a sharp Bessett hearing, not a lot of macro data next week with significant upside headline risk. The math checks out, and that's pretty much it. You had a cool CPI report, you had a softer retail sales read, we had good PPI data, a surprise downside PPI number, and markets are so negative heading into Trump's inauguration that, you should expect to see a rally, right? I will be utterly shocked if markets sell off after Trump's inauguration, because we've already sold off. We've already felt the fear of that. Like it's not new information at this point. Now, Trump is going to do 100 executive orders apparently on day one. So depending on what those executive orders are, if there is tariffs involved, which there probably will not be on day one, then that is what is going to be most important for our markets. But at this point, Wall Street is expecting some pretty aggressive tariff policy. Even if we get something on tariffs, if it's not as bad as feared, it's probably going to be bullish for markets. And I still do think this year is all about AI appliers. And Tesla is the biggest AI applier. I don't think we have any reason, again, to doubt a delay of the robotaxi network. Okay, as long as we don't get a delay of the robotaxi network, I think Tesla's going to do very well. Now, on betting websites, there's currently about a 40% chance that Tesla will launch the robotaxi network in 2025. What that shows me is it's not priced in. It's not generally broadly expected that Tesla will launch a robotaxi network in 2025. I think they will. That, to me, is an upside catalyst. And really, at this point, we already know what Tesla numbers are pretty much going to look like because of deliveries. It's all about the commentary coming on the earnings call. And we don't have earnings next week. So that's, sometimes Tesla gets a little nervous before their earnings. You're not going to see that much of next week. And that is one reason why I do think next week is going to be very positive for Tesla stock. Take a look at Tesla's RSI at 58.75. Pretty much neutral. The MACD line at 8.41, signal line at 10.14. MACD line is curling upwards. If you break above that blue line there, that's going to be a short-term, positive sign for Tesla. And it looks like that could happen in the next day or two. Now, if we get above that 460 level, you're likely to see a larger breakout from there. And I think a lot of people have forgotten Trump-Elon's relationship should be a positive for Tesla stock. And I think that has all but gotten baked out of Tesla stock. And you could see that realization actually set in that, oh, wait, Trump is actually going to be positive for Tesla stock. That's something, again, we've long but stopped thinking about. And I think some of those conversations will come back to kind of the forefront in this upcoming week once the inauguration actually does happen. Now take a listen to what Mark Newton just said on CNBC, why he thinks Treasury yields are going to fall and why the overall bull trend is still intact.
Out the stock market and the broader markets, major indices coming off their best day since the day after the election. Stocks jumped following a cooler than expected inflation data. Join us now, Mark Newton, FundStrat Global Head of Technical Strategy. And you're fairly constructive, I think, Mark. But your one concern is breadth. And we talked earlier with someone about perhaps interest rates either staying where they are or at least not coming down, which is not great for the small caps. So I don't think there's no relief in sight for you.
Yeah, thank you, Joe. Happy New Year. Breadth did get hit very hard starting last fall. We saw declines in healthcare. Just in the last month, we saw really 7 sectors lost more than 4%. So, the percentage of stocks right now above their 50-day moving average is down to about 25%. So it has been a very hard hit market in the last month. The one saving grace is that technology, to its credit, came back and actually has helped the broader indices remain afloat. So long-term trends actually remain in very good shape. It's more just near-term breadth deterioration, as well as I think sentiment has also gotten abnormally, pessimistic regarding the potential plans for, the president-elect's policies, which many of those we don't even really understand the extent to which that could be inflationary, and there's a lot of forces that go against that. What actually happens,
yeah, what becomes law or is actually done. But it still seems like you're saying, look, the indices are holding up, even though if you lift up the hood, what's going on is not great when you look at the detail. You still like 6650 for the S&P, though?
Well, it's just January. That's my year-end target. I do think that's going to be hit. Interest rates have gone up for reasons I think that many don't understand. Some of those have to do with longer-term Treasury supply and the incoming Treasury Secretary's plans on potentially, funding some of this debt in longer Treasuries.
Yeah.
So these things aren't necessarily. We saw yesterday by the CPI data that wasn't necessarily inflationary. I think that's in the rearview mirror for the Fed, honestly. So the reasons why Treasury yields have been spiking don't necessarily have anything to do with what the common narrative is. My view is that rates are going to start to roll over in the months to come. That should be bullish, just given the recent correlation. Treasuries and equities have been moving almost in unison, and so I think that is going to continue for the time being. All equity, investors need to be concentrating on what's going on with yields, more so the velocity of yields. If they were to spike above 5%, that would be a short-term concern for the market. But we haven't seen, substantial trend damage to think that any of our upside targets that we set last month are going to be derailed.
We've had other guests on just today that almost said things that were in direct opposition to what you just said. Right. Expecting inflation either to stay sticky where it is or even move higher, potentially. And for interest rates to at least stay where they are, possibly move higher. You think the corollary, or you think the other situation happens?
I think things are a little bit overbaked with regards to yields having pressed up.
And inflation, too. You think inflation is under, you said that it's in the rearview mirror for the Fed?
I think that's absolutely correct.
Really?
When you look at the factors that make up, inflation with regards to shelter,
then he mentioned shelter being the sticky
What about
point.
energy?
Yeah, $80 oil.
Look, I think the incoming administration's plans are to ramp up production by at least over 3 million barrels a day. That's going to be something that's going to cause crude oil likely to fall down to 50, potentially 40. That's my target. So I'm actually underweight energy for the year. I don't think that's going to be a big deal. That's going to cause further disinflationary pressure. And I think China is something that nobody's talking about. I mean, they're entering a time when it could be a very deflationary time, not unlike Japan was in the 90s. Their interest rates are down 300 basis points below Treasury yields. So that's something that they're going to need a lot of stimulus to be able to help their economy recover. Those are factors that are going to offset any potential tariffs being inflationary, in my view.
Ladies and gentlemen, thank you for watching. I do think in this upcoming week and really over the next couple of weeks, as long as Tesla earnings are good, we could be a $600 stock by March. And that's where some people are, also calling for. You would definitely need to see some good earnings, or good commentary at least, reaffirmation that the Model 2 is launching this year, that robotaxis are launching this year. But with those two things, with, less, aggressive tariffs than we were expecting, and the markets being this negative, it's very easy, in my opinion, to imagine a scenario where Tesla is a $600+ stock by March. I think Tesla's going to be a $945 stock by the end of this year. So, hey, that's we got to see the rally at some point. And I don't think it's all going to happen at once. So 600 by March could make some sense. A little bit of a cool down mid-year, and then a larger rally into the end of the year. If I were to game it out, that's kind of where I would put my my chess players. So let me know what you guys think about this down below in the comment section, ladies and gentlemen. Have a fantastic rest of your day, and I will see you in the next one.